you kind of look at your portfolio this year and you're disappointed with your return, S&P's up 20%, I'm only up 4 or 5, whatever the number is, use the equal weighted index as a better measure, because that's more probably about what your portfolio looks like, a more diversified portfolio, more than just 7 stocks. But that's really going to be a challenge for a lot of investors this year, is because of this bifurcation between 7 stocks that have really kind of eaten the world this whole year and has driven the headline index much higher than would have been expected otherwise. Here's what you need to know before the bell this morning. Let's run and take a look at a few different markets this morning. Again, we just talked about the S&P. S&P is pushing up towards highs here, and again holding a sell signal at a fairly high level here. But again, as we look back in June, July of last year, the market can do that for a while. Markets can stay overbought longer than you think they can. You'll eventually going to get a correction here of some sort. You will get a better entry opportunity to put some money to work. Just have to be a little patient here and kind of wait this out. The NASDAQ, of course, also looking a lot like the S&P, of course, since it's all been pretty much the same. S&P, NASDAQ pushing up here as we get higher levels, also setting at a sell signal at a fairly high level as well. Again, not much difference there. The Dow getting really overbought here. Now, the Dow is a little bit of a different story relative to the S&P and the NASDAQ just because of its makeup. Really sharp advance, extremely overbought right now on the Dow. Dow is extremely overbought here, but again, different makeup. It's a price weighted index versus a market cap weighted index, so it performs a bit differently here. But a very stretched MACD buy signal, very overbought on multiple levels. So again, when we get a correction, we'll likely see that kind of ripple through all these major markets. Small cap, mid cap. Take a look at the Russell 2000 as an example of that area. Again, nice rally from the lows, but again, a very different market structure than what we've seen in the S&P and the NASDAQ. Yes, rallying here, but this, the small cap, mid cap index has not done a lot this year. And that really kind of goes the same way with RSP, which is the S&P equal weighted index. Yes, as we got into the bottom of October, that market was actually negative for the year, has finally put in a decent rally, but again, a year where not much has occurred with the equal weighted index relative to market cap weighted indexes. So again, this goes back to that whole story about the top 7 stocks. And it's interesting because the top 7 stocks, if you weight them in the MSCI World Index, they make up more than Japan, Europe, Canada, all combined. So, there's just these top 7 stocks kind of eating the world in terms of their market capitalization, but that's also driving this disparity between indexes. So if you kind of look at your portfolio this year and you're disappointed with your return, S&P's up 20%, I'm only up 4 or 5, whatever the number is, use the equal weighted index as a better measure, because that's more probably about what your portfolio looks like, a more diversified portfolio, more than just 7 stocks. But that's really going to be a challenge for a lot of investors this year, is because of this bifurcation between 7 stocks that have really kind of eaten the world this whole year and has driven the headline index much higher than would have been expected otherwise. Jumping over to volatility, of course, the volatility index is extremely low and is very suppressed here. Again, this is another one of those signs that suggests we're likely going to have a correction. We saw that back in May, February, March of earlier this year. That reversal led to that bit of correction in March, as we saw that Silicon Valley Bank issue, and then we saw that similar decline. So again, just kind of volatility is very suppressed. That's a good indicator. There's no fear in the market, which generally sets you up well for at least a short-term correction. So look for a reversal in the VIX here that will coincide with a bit of a sell-off in the markets at some point. Now, what triggers that is going to be some news headline. Could be CPI today, could be the Fed tomorrow, could be some other event we're not aware of. But again, normally when the VIX is this suppressed, you're going to get a reversal, and that'll lead to a correction in the markets. So that's what you need to know before the bell this morning.